So guys, this is the most requested video over the past week, and after making my last DWAC video, I said that there was more that I wanted to discuss. In this video, I will not be cheerleading any stock. I will lay out both a bullish side to the DWAC story based upon a very bullish article that I have read on Investors Place, but I will also discuss a very bearish side to the DWAC saga and look into allegations that could see people involved in the DWAC deal facing serious consequences. Remember that this stock has become one of the most shorted stocks on the market, and there is a huge opportunity in the right conditions. If you're new to the channel and want to hear more about exciting stocks about to make gains, then drop a like and smash that subscribe button. I'm not a financial advisor, and this is certainly not financial advice. I encourage everyone to do your own research if you're thinking about investing in this or any other stock. Now let's dive into it. As of today on Seeking Alpha, they have published this short article: Trump stock DWAC losing favour with Seeking Alpha investors after initial big move. Interest is fading in DWAC. Investors removed DWAC from their portfolios overall, with a ratio of 2 removals for every addition. The SPAC became one of the fastest additions to portfolios right after it announced its deal with Trump Media, which includes the former president's Truth Social platform. Phunware is also being removed twice as fast as it's being added, and volume and share prices down massively for both DWAC and Phunware, with both stocks barely being mentioned on Wallstreetbets over the past few days. So with all of this in mind, this leads me on to the best article that I have read about DWAC since the stock first took off. Now I'm going to talk about both sides of DWAC argument in this video. So if you are looking for positive talk without discussing any of the negatives, then maybe this video is not for you. But if you want a balanced look, where I will look at the potential legal problems that DWAC, Donald Trump and Patrick Orlando might have, as well as talking about some hypothetical revenue figures that TMTG might have. So this is hands down the best article that I have read all week. This was published on Friday, and the author here, Larry Raymer, does disclose at the end that on the date of publication he held a long position in DWAC stock. He has conducted research and written articles on US stocks for 14 years and has had a number of highly successful picks, and his stock twits is here too. So DWAC stock could benefit as it makes conservatives feel heard. This is something that I've seen again and again in the comment section of my other DWAC videos. TMTG is viewed by a lot of investors as a company that will give a voice to those who feel silenced, or those who feel that they cannot post certain things on other social media. Those who despise former President Donald Trump may not want to remember that he received over 74 million votes in his unsuccessful re-election campaign. That means that tens of millions of people in the US are Trump fans, indicating in turn that his social media enterprise could be very lucrative. At this point, I just want to say that in my opinion there is probably the same amount, if not more, across the rest of the world who don't have a vote in the US that would be just as likely to use Truth Social. First off, a misconception that the author here thinks many investors could have about Truth Social is that it will be dominated by the former president. This probably won't be the case, since Trump is a smart businessman and a good experienced showman. He likely knows that almost everyone enjoys variety when it comes to entertainment. Former famous Republican politicians, telegenic, former Fox News personalities, well-known Trump allies and former family members, as well as conservative radio hosts, are all likely to have highlighted accounts on Truth Social. All of them could also appear on videos and shows on the social network. So many conservatives are very tired of and upset with the censorship and anti-establishment and anti-left-wing ideas. There are many examples of totally unjustified censorship, and in the opinion of many commentators, not all of whom are conservative or pro-Trump. Again, this goes back to what I said a minute ago. Many see Truth Social as giving a voice to those where the usual social media have silenced them. And the author gives a few examples here, including the decision to ban Trump himself. In light of these issues, many people are looking for a much more tolerant platform. Since no website has emerged as a popular alternative to Facebook and Twitter, Truth Social could fill that void. In other words, a huge percentage who feel that they have been alienated from Twitter and Facebook could turn to Truth Social, That point alone makes a bullish position in DWAC stock worth considering. So this next part of the article is what I like most, some potential numbers. Is that this is not just someone citing figures with no basis or saying that because Facebook is worth $900 million, that Truth Social should also be worth $900 million. The author here has actually done some calculations, and these are done on a very conservative estimate. So let's take a look at this. So let's say that in Truth Social's first year, 30% of Trump voters use Truth Social every month. That works out about 20 million people. Let's throw in another 10 million from overseas, which brings us up to 30 million monthly users. Facebook's average revenue per user was $10 last quarter. Annualized, that works out at 40 per year. So if we give Truth Social an annual ARPU of $30 per year, that's 90 million of annual revenue. Then there's the subscription streaming service TMTG. So let's say that costs $10 a month and 20% of monthly users subscribe to it. That's another 720 million. And I would be surprised if Truth Social did not host many special live events that brings in at least another 100 million of annual revenue. So far we're already up to over 900 million in revenue. If 20% of that flows to the bottom line, Truth Social's first year profit would be about 180 million. Multiply that by a price earnings ratio of 25 and we get $4.5 billion. The current price is now below $60. So according to these estimates, which are fairly conservative, DWAC, just based on the value of Truth Social in its first year, is trading at only 40% of its possible value. Since Trump began running for president in 2015, many believe the media and government have relentlessly targeted him for punishment and retribution. That trend is continuing now. What's more, Silicon Valley earlier this year effectively destroyed Parler, the only social network that had gained a significant following among conservatives. So there's every reason to believe that Truth Social will have many very powerful enemies looking to derail it. As a result, DWAC stock is quite risky. I spoke about this in my DWAC video last week. The barriers to entry into social media are extremely high given the small number of extremely powerful players who hold all the power and rank among the world's richest companies. The author's final opinion here is that the shares are extremely undervalued, but they pose a significant amount of risk, and this is something that I completely agree with. There is rising sentiment that former President Trump is preparing for another run as a Republican presidential candidate in 2024. Truth Social could be a way of promoting his campaign since he is still banned from Facebook, Twitter and YouTube. The odds at online sportsbooks, which are usually a sharp way of gauging the market, have current President Biden and Trump as neck and neck for the most likely president following the 2024 election. So I'm sure if you're watching this video and follow my channel, then you're very well aware that I'm Irish and I'm in Ireland. In the news at the moment here is the sentiment in the US is very much against President Biden and that his first year in office has generally not been a good one. Is there any truth to this? Drop a comment and let me know. If Donald Trump runs for re-election, is he likely to win next time? I'm interested to know what you think. Now, that was the positive side of the argument, so let's look at the negative side, or the bear case. So Pomerantz law firm investigates claims on behalf of investors of DWAC. Last week, the New York Times published an article entitled "Trump's $300 million SPAC deal may have skirted securities laws by involving discussions of a merger with DWAC's founder before it actually went public. These discussions may have violated federal security laws which prohibit SPACs from planning mergers before conducting their IPOs." On this news, DWAC stock and warrant prices fell sharply during trading on November 1st, so let's take a look at this article. Trump's $300 million SPAC deal may have skirted securities laws. The former president began discussing a deal with a blank check company earlier this year and investors weren't told. Just days after Trump left the White House, two former Apprentice contestants approached him with a pitch to create a conservative media giant. This month, the former president found a way to make this a reality. He agreed to merge his social media venture with the SPAC. The result is that Mr. Trump, largely shut out of mainstream financial industry because of his history of bankruptcy and loan defaults, secured nearly $300 million in funding for his new business. The New York Times says that Mr. Orlando had been discussing a deal with Trump since at least March, and a confidential investor presentation reviewed by the New York Times that was well before DWAC made its debut on the Nasdaq last month. In doing so, Mr. Orlando's SPAC may have skirted security laws and stock exchange rules. So if you're not familiar with the difference between SPACs and a regular IPO, SPACs go public first and then find a private company in which to merge. Because SPACs are just shells at IPO, they are allowed to list their shares without disclosing much financial information. But that creates opportunities for SPACs to serve as a backdoor vehicle for companies to go public without receiving the kind of investor scrutiny that would be in a traditional listing. This is why prior to 2020, SPACs had been largely frowned upon by Wall Street, but after a few SPACs made huge gains and big headlines, we quite literally had a SPAC boom and bust. To prevent that, SPACs aren't supposed to have a merger planned at the time of their IPO. DWAC repeatedly stated in their filings that they had not engaged in discussions with a target company, and lawyers for both Trump Media and the other parties have declined to comment. And this is where it gets most interesting. Benazere had not gone public in January and TMTG was formed in February. By March, Patrick Orlando and Trump were discussing a merger of Trump Media and Benazere, according to people with knowledge of talks who were not authorized to discuss it publicly. The investor presentation about the planned deal envisioned a combined company which would offer a social media app, films, events, and eventually a variety of technology services, being worth $15 billion and rivaling tech giants like Netflix and the cloud divisions of Amazon and Google. At some point, Benazere's attractiveness as a financing vehicle for Trump's venture faded, in part because its roughly $100 million war chest was considered inadequate. But Mr. Orlando had another bigger SPAC that was preparing for liftoff. By the summer, people affiliated with Trump Media were signaling in conversations with Wall Street financiers that they were nearing a deal to merge with the SPAC. In early July, it said here that the company was in an exclusive agreement with a SPAC. It isn't clear if he's referring to DWAC. If Digital World and Trump Media had a deal in the works at this point, it would have contradicted the SPAC's public statements and very likely violated regulations. Security lawyers said that any conversations between Mr. Orlando and Mr. Trump's teams anytime before the IPO in September might constitute an indirect discussion of a potential deal and so would have needed to be disclosed. But some bankers disagree. They argued that Mr. Orlando, having discussed the deal between Benazere and Trump Media, wasn't the same as him discussing a deal on behalf of Digital World. As a result, they say Digital World wasn't obliged to discuss any prior talks. DWAC eventually went public on September 8th, and only 3 weeks later the letter of intent was being signed between Trump and Orlando. After the deal was announced, the share price rocketed up. Some of the earliest investors, such as Shaw and Saba Capital, sold much of their stock after the Trump deal came to light. Another prominent investor, Iceberg Research, announced that it was now betting against the stock. So guys, that brings us to the end of the video. If you've watched all the way through, then hit that like button. It really helps the channel out a lot. What do you think will happen here next week? From what I have discussed here, do you think that DWAC is undervalued, or do you think that DWAC and all parties involved will be in real legal trouble? Personally, I think that if Patrick Orlando did not already have Benazere Capital SPAC, then I think that there would be huge consequences here. In my opinion, it is clear that they had been in discussions prior to DWAC going public, but I think the technicality of the discussions, having never actually involved DWAC, could quite literally be the get out of jail card here. As always guys, this is not financial advice and I am not a financial advisor. Drop a comment down below and let me know what you think. And if you're new, subscribe, hit the bell notification, and I'll catch you in the next one.